Devarakonda, the CFO at Electronics Mart, is joining us on the show to talk to us about their earnings and the way forward. Hi, sir. Good to be speaking with you. It's a decent top-line growth of around 15% that you've reported. But going forward in FY25, do you anticipate an acceleration of this growth rate, given the fact that Tier 2, Tier 3 cities are gaining a lot of momentum in terms of their spends? There has been this heat wave as well, which has led to the rise of, spends on ACs and other cooling products as well.
Good morning. First of all, thank you very much for having me on your show. Acceleration of the growth rate, in fact, in these markets is a challenge. But if we sustain this existing growth rate in future, so I think it is a good achievement for us. Of course, there is certain products, consumer durable products like air conditioners, penetration is very low in Tier 2 and Tier 3 cities. So there we could see a decent momentum in the ongoing summer season. So if this trend continues, definitely we would improve on the growth rate by at least 1 or 2%.
Why the performance of small appliances you think was a slight miss as opposed to, of course, what the street was penciling in? And what is the visibility really on this particular segment in the coming quarters from you?
See, after, most of the women, actually now they are preferring to go for an employment. They're moving out of the kitchens. As a result, that kitchen appliances dependency on the kitchen appliances has come down. So now in the markets, there are so many ready-made half-cooked products are available, half-baked products are available. So these things actually reduce the dependency on the home appliances. That's one of the reasons why there is little degrowth in these categories.
Sales growth that was in single digits, close to 7.3%. Can you, up this target, or do you think that it will continue to remain around the 7% mark?
Same-store sales growth will be between 9 and 10. So that is our target, and we have to maintain that in future also. So that is easily possible and achievable.
Okay, point taken. What about the expansion plan going forward? Which are the geographies that you're targeting? What kind of store addition plan you have, sir?
See, we are in the South cluster in AP Telangana states. We are going to continue our expansion plan as in the last year, and that continue for next couple of years till we don't have presence across all the district headquarters in these regions. That is going to be our focus area. Apart from that, in NCR, we are stabilizing our stores, which we are right now operating around 20 stores. So that is going to be increased. We are going to add year on year at least 10 stores for the next 3 years. So that is our target. And around NCR, so in the peripheral districts of NCR, we are going to focus, and we are right now ready with our master plan for the next 3 years.
In specific, what's your read-through when it comes to Delhi NCR? Are you seeing better visibility in terms of margins as well as growth as opposed to the southern state where you have strong presence?
It is not exactly like, it is more or less in the same lines as we are operating in the South India. So in NCR also the margins will be more or less the same. But there is the NCR markets actually they're favorable to the luxury products. So that is where I think it is the only thing. For example, like iPhone market is much bigger than South Indian market. Similarly, large screen television market is also very big as compared to South Indian market. So, but when it comes to margins, it will be more or less in line with South cluster margins.
Similar to what, sir?
Similar to South cluster.
Southwest, okay.
South cluster.
Okay. Got the point. But moving on, I just wanted to get a sense from you in terms of the other internals. The mix that you talked about, the large appliances versus mobile versus small appliances, are you seeing a shift there? And even in terms of price points, are you seeing that upward trend towards premiumization in categories like mobiles, etc.?
Definitely. There is, in fact, mobiles are doing exceedingly well as compared to other consumer durables. So the growth rate in mobile is abnormal. Like, in fact, it was not anticipated earlier. So it is growing rampantly. And that's the reason why, if you look at our product mix, actually, that earlier it was between 35 and 40%. Now it exceeded 40% this year.
All right, thank you for sharing with us your targets as well as the growth outlook for the company. Slipping.
If you like this video, then like, share and subscribe to ET Now.